A strong set of results. The outlook is a lot more uncertain.
Yeah, the results are honestly, we believe, are really good. Q3 is traditionally a weak quarter for us. This is now the third quarter successively that we have more than $1 billion of profits. We've never done that. And 9% return on tangible equity in a very difficult market. So we're quite pleased with that. And that was the objective of everything we did in the last 3 years, build a bank that could do reasonably well even in tough environments. And this was a tough quarter. The outlook, we're cautious. We think that the wealth management fundamentals remain there. You look at our transaction revenues in wealth management, they're up 12%. We're up 19% in Asia, up 13% in revenue in Asia. So that wealth management story has traction. Where we are more dependent is like on the primary market. We see that IBCM is under pressure. There's less primary activity because of the uncertainty. Did very well in global markets, at least, I think last time I told you it's the first time I smile when I'm talking about them, so I'm glad to be able to smile again when I'm talking about them. It's becoming a habit. They did extremely well, really industry-leading performance, up 34%.
So on trading, are you doubling down when a lot of your competitors are retrenching?
That's a great question. We are doing this with the same amount of capital. The reason I am so pleased with this performance is that it's very good, but it's done with the same amount of capital. We've done all this with flat capital, so we're up 30% with the same amount of capital. So the easiest and the biggest trap in investment banking is to pour more capital in, which then drives revenue. But the returns being what they are, it's not a long-term strategy. So we're really pleased that they did what we told them. Restructure, then grow, but with capital efficient. So the outlook, political uncertainties, yes, US-China, big one. We all wait for November in Santiago to see if we're going to get a mini deal or not. That's a big one. And then the Brexit, of course, which we've discussed many times, and where the uncertainty actually possibly for the first time is reducing. And then the Middle East and all other considerations. So where you see that having an impact is on very big transactions and capex. Like people have very little visibility on 2021. So all the decisions that go beyond that tend to be scrutinized and delayed sometimes.
On the wealth management, do you still see pockets of growth that are untapped?
Yes. We see, I was just in Brazil, which is booming. I saw everybody, and it's one of a few countries right now with positive real interest rates. And the growth, the potentiality are very strong. All over the Middle East, not to mention Asia, where we still see a lot of opportunity. In Southeast Asia, we're doing very well. China is, of course, under pressure. Revenue in China is down 18%. But we still see all those same fundamentals of wealth creation and expansion of those entrepreneurs who are primary clientele still intact, yes.
So going forward, you worry about geopolitics. You talked about expenditure. Is there anything else that could make investors nervous? Yeah,
the negative interest rates are not helpful to the banking sector. I think everybody can see that. It's something that will have to change at some point to really get the sector back on track, I think.